Hello, my friends. It's your old pal Peace Love Music. I'm super excited right now because I am getting a dose of something I haven't had in a long time, and I think it's been lacking in my world. I'm super excited to have with us back again, finally. We have Landy in the house going to come teach us some TA. We got to learn TA with Landy. Episode 20. It's been a few weeks. Had a hard time lining this up. Actually, yes. The TA master, the master of TA, does not like the music too loud. How are you today, Landy?
How you doing, Peace? It is
good.
I'm thrilled to see you again, brother. It has been a while.
Yes, it's been too long. We just, I know you're an extremely busy man and just a lot going on. And, we got a lot going on at DeOrganized too, and real estate and your high level stuff that's got you traveling a lot. It's just been it's been too long, and I'm super glad to be back and get a chance to chat with you and learn some of your amazing technical analysis skills that you share with us on the regular over here at DeOrganized.
Yeah, brother, you look, I'm excited about this. I rarely get to riff on this stuff anymore. There's been a few spots here and there. You might have seen me, hanging out with the Valar guys on occasion. But it's not the regular cadence like I'm used to, where I get to actually describe what's going on and what my process is for breaking down these charts. And I personally love seeing your face. I know that you're just staring at a puppet, but I miss you, brother. So I'm ready to go. I'm ready to get right into this and talk about what's going on in the markets and kind of break things down. We'll kind of get back into the groove of where we kind of left off.
Let's do it. Bring up the charts.
So, Bitcoin, we all love Bitcoin, and Bitcoin just closed its monthly. So, when you see higher time frame closes in any market, you should start from the macro and work your way to the micro, right? And I've preached this for a long time here. We had a monthly close, but we also had a 2-month close, and then we also had a quarterly close, and then we also had a 6-month close. So let's start with the highest time frame on Bitcoin. And this is really where, when you want to get a really good look at the longer term price action, I say, a lot of people will say, hey, go look at the yearly. You look at the yearly, kind of track it as it relates to the previous yearlies. But in reality, I like to really start with the major time frames like this, especially when we just got a 6-month close, to start at the 6-month and just kind of get a nice view of this beautiful chart, this big, beautiful chart for this asset that has only been trading since around 2009 for most centralized exchanges, right? So Bitcoin did have its highest 6-month close, right? We can also see that over time, Bitcoin has, it was very, very volatile to the upside in the beginning, and that's kind of slowed down. And this is where we often hear the narrative of, Bitcoin is getting price compression over time, meaning that the dispersion of returns is decreasing or volatility is decreasing. It means that it's not going to go up as much in terms of percentage and not going to go down as much in terms of percentage. So, but when looking at in studying indices and commodities and really any new asset, especially, they start out fairly volatile when it's traded openly, right? And then they decrease volatility over time. And then that volatility resolves in that decrease in volatility always resolves in an increase in volatility. And that's where we get an increase in the dispersion of returns or, larger moves. And Bitcoin being a limited supply asset with a fairly low amount of circulating supply relative to demand and decreasing emissions over time, well, that means that Bitcoin's really only going to go one way after this compression on longer term timeframes, and that's up and to the right. And there are some in the camp of, Bitcoin's gonna decrease volatility over time, and it's going to continue to do so for X number of years. And I would argue that, while it might decrease in volatility over time and maybe continue to do so, it's poised to increase volatility on the 6-month time frame. And this is the index here. So these prices that we see here on the index are going to be aggregated pricing, whereas you typically see me charting spot price on Coinbase, because that's where all the bigger players are custodying their Bitcoin and working with Coinbase to acquire more coins through them and any partners. So on the index here, you can see the big volatility increase. And then after, we've talked about the Bollinger Bands, right? We've talked about, my ethos is the pillar, the 4 pillars of any trading system. And this is across all of the trading systems, is trend, support and resistance, which are the swings in trend and the swing points in trend. And then you have volatility and momentum. And the first 3 create the 4th, which is momentum. So where are we in trend? Well, this is an uptrend on the 6-month time frame. And where are we in terms of support and resistance? Well, we're above the prior resistance, right? Which was the prior swing high, right? So we're above our $69,000 area here, right? So well above it at this point. Although when you're looking at the candle structure, it's not too far above where we were last time. In fact, it's about 41 point. I'm sorry, it is not 41. It is about 27.2% above the $69,000 high, versus the 61.8% that the $69,000 high was above the $19,000, $20,000 high here, right? So we have decreasing volatility to the upside, but the move's not over. This is still higher highs. This move is not done yet. It doesn't mean that it can't, in the next 6 months, be done. But we'll look at some of the criteria and kind of how that shapes up. But it's an uptrend, and it's fairly lower volatility, but it's starting to paint the picture that it wants to increase volatility, especially when you see 6-month candles consistently closing above the upper second standard deviation. You might be thinking, but this is sideways and up. Volatility is still very high. Well, in the 6-month time frame, when we look at volatility, we can see that it started out very high and then it comes down over time, right? And we can compare how this works on a 3-month time frame or a quarterly time frame. You see how it starts out very high over time and then decreases in its volatility over time. And we can go to the 2-month. You can see starts out very high, and then the volatility decreases over time until you get normalization of the low side of the volatility metrics. So lower periods of volatility start to actually normalize. We can see this on the monthly, very volatile over time. And then we start to actually normalize back here in 15 into 16. We had a nice big spike, but still lower volatility. And then we came down, and we've been normalizing on the monthly for volatility on the lows or compression phases for quite some time. And in fact, we've seen 2 equal volatility spikes. So we have normalization on the monthly chart here. And that's around the 77.5 volatility read for this particular volatility indicator called BWP, which is by the caretaker. It's free. You can find it in the indicators tab here. But we are back on the lows of volatility for the monthly. We are decreasing volatility on the 2-month. We are back to, we got a little bit of a volatility increase on the quarterly. We still haven't seen normalization yet, but we've been increasing, and now we're back on the decline for the quarterly. And then we saw an increase from the back half of last year to the first of the year. And then we've now seen a decrease in volatility. Now, here's the beautiful thing. This decrease in volatility comes while Bitcoin is in a beautiful uptrend for the 6 month and is well above its upper first standard deviation, which is where volatility is going to remain kind of high or still very volatile in terms of compression and expansion. So above the upper first, you're going to continue to expand up and to the right. And of course, above the basis at its lowest point will be expansion up and to the right, because that is a 20 simple moving average that's tracking the previous 20 closes. So when looking at this, we got our first ever cross of a moving average in Bitcoin's history for the 6 month time frame, and it's not too far away from getting that cross again in this next 6 month candle. But the criteria is very clear. If we lose the upper second standard deviation right there at about $100,000 on the 6 month time frame, we'll continue to see volatility decrease. Right, that would also look, that would look like a top, to be quite honest, in the market, especially if it started trading and closing below there. Doesn't mean it would be, but it would start to look like that, at least on the time frames lower than the 6 month. But what I'm trying to illustrate here is there's a lot of demand that's for Bitcoin. I don't know if you've heard, but there's just, maybe a little bit from these treasury companies and from governments and states, corporations.
Not Connecticut.
Not Connecticut, though. Yes, obviously they just want to make sure that other people have access to Bitcoin. That's the way I choose.
I didn't realize how benevolent they were being there.
Yes, see, very benevolent.
It is really fair, except for to the people in Connecticut.
Yeah. Yes, Connecticut. Just we want to make sure the Bitcoin is available for the rest of the people.
Not you, New London.
Oh my God, what a boneheaded move they made, huh? Anyway, but generally speaking, Bitcoin is a very desirable asset by some of the most powerful players in the game in the world right now. It's kind of becoming a trend, especially the Bitcoin treasury company thing, right? So we have a lot of demand for, only so much circulating supply and decreasing emissions, right? So, this is going to, in my opinion, resolve. And there's only one way for this to resolve when volatility picks back up, and that is to the upside. And while we will see periods of lower volatility, I don't think we will ever see a period of high volatility to the downside where we're getting an expansion phase to the downside. In fact, it's impossible right now. That's how confident I am, because there's literally no lower bands for it to expand from. If anything, it would be a revert back to the mean as price comes down, which is not expansion, that is compression. Now, when looking at something like a 3 month or a quarterly, this is where things get very interesting, because we just had the quarterly close. It is a quarterly closing all-time high, and in this past quarter we did see that Bitcoin made a new swing all-time high up here at $112,000, at least $112,000 even on Coinbase spot. For the index here, it's a little shy of $112,000. But you'll notice something here. See these bands? They look like they're squishing together, don't they? And you can see that in prior cycles, we had, once the band started to populate by looking back 20 bars or 20 candles, we had a compression, right? You see the upper bands are moving down, the lower bands are moving up. So we went into a compression, and then we hit expansion. Once we closed above the upper second, we started to hit expansion. The lower first dropped right off the map. Right. And then we got our big 2017 run, and then we revert back to the mean. And in the bear market, especially coming into the test, which, by the way, 2019 was just a test of the close open all-time high at 13.8, 14K area. And then we went down for a higher low in the quarterly. And during this phase, we saw compression again. the upper bands going sideways and down. Technically, we were still trending up, but we saw the lower bands begin to compress. Volatility was coming down. We got our expansion. We started to get that in October of 2020 for that quarterly into the first of the year, and then we saw the highs come in. And then you'll notice something. Ever since last cycle, we've just been compressing, which means that we actually haven't hit, although we've hit the run portion, right? Above the prior cycle high up here, the bulls have ran, right? So we have had a bull run, but we haven't seen volatility expansion in earnest to the upside. And that is only going to occur. It's still saying, price volatility remains high, but within the bands here. And we've seen a couple closes above the upper second standard deviation. So we've got a grand total of, of course, I can't grab the actual thing I want to grab here. We've seen a grand total of 1, 2, 3 closes above the upper second standard deviation. And typically when you close above it, you start to push up in a volatile fashion. First close back under is typically going to be what brings you back down on a quarterly time frame. But we see a character change in price here. So compared to its prior history, where the first bearish candle usually marked the top, right? So first bearish candle, followed by bear market, first bearish candle. We did get a swing, but this was essentially the top on the quarterly. We saw no closes above, right? Big old rejection on the quarterly, and then down into a bear market. We've gone green or bull, bear, maybe bear. We don't know, right? But we are still in a compression phase. And why am I starting here on such high time frames? Well, one, because we've just literally, today is the first day of the month, first day of the 2 month, first day of the quarterly, and the first day of the 6 month. So this is very important. If we continue to see, if we see another close above the upper second standard deviation, we're going to begin to pick volatility back up off its ass here. Excuse my language. See how this volatility ticked down? It did not cross below the moving average just yet. If we close sideways and we do not close and continue to push up, this will cross back under, and it's close over close. So it would be the next close, which would be the end of year close for the quarterly, that would facilitate a decrease again in volatility. But if we see a close above the upper second standard deviation, and more importantly, continuation above 112 here, then we can start looking up to some pretty deep levels. Now, there's going to be levels in between, but from the band's perspective, we'll increase volatility on closes above the upper second. We saw the decrease because we've gone essentially sideways. We had that bearish candle in between. We need to see a green candle above the upper second here at 106. I'd call it 107. And then another green candle that continues up to break the all-time high if it hasn't already been broken. So, and that would be pushing up in a volatile fashion towards the upper third, which is currently sitting at $134,500 to $135,000. So this is important because what we know is that volatility expansion is only going to occur to the upside right now. And in fact, the only way that we would see quarterly volatility expansion to the downside is if we lost the basis band, which is at $51,500, and then started to push down towards the lower first. Now that would be, you'd see volatility pick up. Volatility would come down on the move back to the basis band, right? So losing the upper second and moving towards the upper first, you'd see volatility come down. Moving from the upper first to the basis band, volatility would come down again, or it would be a return to the mean. That's also known as compression or price compression here when using bands. And then you would see volatility pick up as it relates to the bands if price lost the basis band and moved towards the lower first, which is all the way at $23,000. But we wouldn't see expansion unless we closed below it. And I'm going to tell any kind of bear out there right now, don't get excited about any of those downside targets, because it is a very, very low likelihood, almost an impossibility from where we currently stand. you would have to have an outsized portion of dumping across every major institution, every ETF, and no appetite. Appetite would have to dry up as well at the same time that these dumps would have to happen, right? So don't get excited about $20,000 and under for Bitcoin. I'm sorry, that's a very low likelihood. Maybe 50s, maybe mid 50s. There's also fundamental reasons why. And that is
towards the next cycle low.
Yeah, we're talking like from here, the basis band for, we did get under the basis band. So maybe 40s if it were to stop and reverse right here, right now. But then you have to consider minor electrical cost, not production cost, minor electrical cost, which is the value in Bitcoin dollar terms that miners can equate the electrical cost to mine Bitcoin to.
Which means that they would just stop mining and buy the Bitcoin.
Well, they wouldn't stop mining, but you would probably spin down some operations. And right now it's at around $56,000. And that's where the electrical cost floor is. We've never really traded below it except for 5 minutes, $5,000, 5 total minutes.
So I'm under any impression that this is actually likely to happen anytime soon. But what if there was some kind of technological breakthrough where electricity became super, super cheap and abundant? Would that have an effect on the price of Bitcoin?
It would make profit margins rise. It would push the minor electrical costs down. But you gotta understand that even if that were to happen, that's so far in the future that we're likely to have more halvings by then. And we have power plant agreements that we sign. So it's not like, hey, electricity, we would fight to redo our power plant agreements, but that's about it. You'd see a lot more new miners come on. You'd see a lot more increased competition on the network. And that's the beautiful part, is that when you see increased competition, the difficulty goes up. So then it normalizes minor electric. Look, Bitcoin is beautifully built, just so you know. So if electrical cost dumps, more miners are like, hey, for where Bitcoin's trading, I can get in the game because we can have some profit margin here.
Right. But it makes it harder. So the overall cost.
So the whole cost goes up. Yeah. So cheaper electricity, more miners, more incentive to mine, difficulty goes up, cost goes up. Right. Bitcoin is so beautiful in that way. It's such a wonderful thing. So what a great question too. I haven't gotten that question in a very long time. But yeah, my point being that the only way for this to get expansion is going to be to the upside for the quarterly, right? So where we see this actually expand, the easiest way to see in a quarterly is when you get closes above the upper second, upper third, you see the lower first drop off the map. We don't even have enough data in history for a lower second. So we won't be getting expansion to the downside anytime soon. Everything from here to the downside would be mean reversion or compression. And that doesn't mean that price isn't volatile within the bands. We're talking about compression and expansion. Price can be very volatile within the band.
You're saying you'd likely see that first, lower third, or lower first would actually still be kind of going up towards the mean, even if the price went down towards the
basis. Yeah. Okay. And it would still be continuing to go up, or it would flatten out even if price is moving from the basis towards the lower first. Yeah. So that's where you would see like the basis start to flatten out. You'd see the lower first start to flatten out, and you'd see all the upper bands curl up and over and then flatten out. So you get this up and over and then flat, right? So just like last cycle, we returned to the mean. We were kicking off compression. Compression started right here, and it's easy to see on the longer term timeframes by looking at that lower first. That's one of the reasons why I use a triple band set, because it has, typically when you use Bollinger Bands, it's 2 standard deviations or the second standard deviation away from the 20 simple. That's the way that John Bollinger created the bands. I use a lower first because it helps to refine longer term timeframes, and it gives you areas of interest away from the 20 simple and to both the downside and the upside that are measurable on the chart. So like I know that the lower first is currently at 23,767. I know that the basis is at 51.5. I know the upper first is at $80,000 or $79,000. Sorry. I know the upper second is at 106.8. It was 107 yesterday when the candle was still green, right? So, or this morning when the candle was green, it was at 107. I know the upper third is at 134. Now, when we start closing above these levels, that's a checkpoint for me. That's like, okay, volatility is going to increase, and it gives us a volatility zone of interest to the upside, and these become volatility zones of interest, which are different than our support and resistance levels, right? It's the potential for price to go, especially in price discovery. We typically see when we get an expansion phase, Bitcoin closes outside of the upper second and upper third. We can look at the since its inception, back here in 17, close above the upper second, then close above the upper third, second, third, all the way through the 2017 high. In 2020, we saw close above the upper second and third for those two candles, right? So far, we've only been closing above the upper second at this point, and we did tap on the upper third when it was at that 108, 287, but we did not close above, kicking off that really volatile expansion to the upside in terms of expansion of the Bollinger Bands. Right now, we are still volatile within the bands, but that's relative to where we're coming off of the basis band. And because we've gone sideways and the basis band continues to rise, well, we continue to get this compression. And it will resolve to the upside. There's only one way for it to resolve at this point. When we go to the 2-month, we can see that we've had the same kind of look. And essentially, this is what I'm looking for, right? When we look at history for the 2-month, we have, where it populates, it was already in the midst of expansion. We get the compression, and then we get the re-expansion above the upper second and third. It's kind of marching and hugging in 2017, early 2017, and through the end. And after the highs were in, revert back to the mean, compression again, and then we get that expansion again. Then we go back into compression after the move back to the upper first, and then we went into a longer form compression. And what we did see for the 2-month is we're still in an expansion phase. You see that we didn't hit such an expansion phase or so volatile that we had both. So to see the teal is the lower second and the gray to the bottom side is the lower first, just like we have gray upper first, teal upper second here. Well, last cycle we had both the lower second and lower first drop off as we closed above the upper second and upper third. And here we've only seen the lower second drop off. We have not seen the lower first move. And this is because volatility has decreased over time. There's more history, and we haven't hit like full on upper second, upper third standard deviation closure expansion. We've gotten a grand total of one closure. So we started to get expansion on the close. So we see the compression of the bands. We close back above the basis or the 20 simple. We start to move up towards the upper second, got that close above the upper first here. And then we started to expand as we sat above the upper first. We closed the green candle above the upper first here and then closed above the upper second. We got a kind of ever so slight close above the upper second, but we really haven't gotten consistent closes. We need to see at least close over close price expansion above the upper second at 113 for the 2-month. And that's where we would see continued volatility expansion. We would likely start to see this lower first start to move down off of the, instead of moving up or curling up, because we're back in a compressive phase right now between the upper first and upper second, because we've been here since the beginning of the year. We've now seen the lower first start to move even back up. If we start closing back above the upper second, we'll see that move down. We'll start to initiate expansion again to the upside. And of course, closing above the upper second would meet the criteria of closing above the all-time high, thus kicking off expansion at least during this candle on the 2-month. Doesn't mean that it closes there, but we need to see closes above there for it to truly kick off expansion. So we need to see closes above, basically 114, 115 area this candle turns green, by the way, while it's still open, the upper second will move ever so slightly, and it will likely be around 114.5 to 115 if we see this candle turn green in this 2-month session. And that's where we'd be looking for continuation. But you can see how that fits in. If we're getting continuation and expansion on the 2-month, then we have to look for it to follow through on the quarterly, because closes above 107 will kick off close over close price expansion above the upper second on the quarterly. If we see that continue to move up on the 6-month to really kick off expansion on the 6-month, we actually need to see closes above that upper third at $134,000. So you can see that like how this kind of all fits together is we look to those lower term timeframes for the expansion to start. And then there's pretty clear criteria for it. And there's really only one way for those, timeframes below the 6-month to the 2-month to expand at this point. You notice I haven't said monthly yet. There's only 2 ways for it to actually get expansion. And that's either to the upside or to the upside. Those are both ways. Don't you like my example there?
Yes.
Because it ain't going to be to the downside. There is no closing below the lower first is just an impossibility, in my personal opinion, from a fundamentals point of view and from a technical point of view. There's people who disagree with me on that. And that's fine. They can continue to disagree and be wrong. The lower first to even close below it, which would kick off initial expansion to the downside, just not seeing it. You can see price volatility, BBWP, pick up. But that would be mean reversion. We go back into band compression as we come back to the basis band, which is currently at $53,000 in the 2-month. But it's a big but, and I will not lie, and no other brother can deny that there could be potential. I don't think it's going to happen anytime soon, but over time, you'll see that on the monthly, we have the big expansion. We started to go into a compression, by the way, as soon as we put in the first top on the monthly close last cycle for the monthly. You'll see that we put in the high at 65, and then we got the close. We started with compression on the close on the high, and then we got the bearish close that actually set the closing high with the swing high at 65, and then we had the high there at 58.8. Well, that actually kicked off compression again. And when we were mean reverting or pushing back towards the basis band here, we were compressing the entire time. And then price spiked the upper second standard deviation at 69K perfectly twice while in a compression phase. This is why I was bearish last cycle, because unless you close above it, you're not re-expanding, right? So unless we closed above that during the compression, we're not going to re-expand to the upside. In fact, we're more likely to paint a high and come back down and then go into a consolidation or potential expansion to the downside, which, by the way, we got our first ever expansion on the monthly to the downside. We went to the basis band on the monthly. We then dropped down to the lower first in the midst of compression. And then we hit the lower second, which kicked off expansion of the bands for the first time in Bitcoin's history to the downside. We clawed our way back up, because this changes the entire, because that happened in 2022. This changes the entire compression to expansion setup, which is what's leading to those very long-term compressions that we're seeing. So we had a return to the mean, which then caused expansion again. And then we started to expand, right? And we got our first expansion, new all-time high. Everybody said top was in. We came down into higher low structure. And since we came down into higher low structure back here at 49K, we have been in a compression again. So the only way to get expansion from here is going to be closing above the upper second standard deviation, preferably close over close, not just one. But it's so close, 13 over 15 or 13 under 15, that if we closed above the upper second at about $117,000 to $118,000, we would start to see BBWP pick back up, maybe even get over the moving average, and we would start to get expansion to the upside again. At least initially, we need to see close over close continuation for that expansion to become real on the chart. or we're going to continue to compress and come back down towards the basis, which is currently at $77,000. By the way, it's good that the basis is above the last higher low on the monthly. It's a beautiful uptrend. But the only way to get expansion is if we dropped that 420.69 on spot, and started to get below the basis band towards that lower first, and then drop the lower first towards the lower second. I don't think that's going to happen from here, like straight candle down. So we're going to see if Bitcoin just kind of goes sideways or even paints a high. We'll see the lower second and lower first start to race up into a compression. So we'd likely see the lower second in the mid 40s, lower first in the mid 60s, and then the basis more towards the low to mid 80s. Right? Even if we were to paint this candle red, that's very likely where we're going to see the bands end up. And then you look for the possible closure below the basis, below the lower first, towards that lower second, and maybe even the lower second dropping. So that's where we are right now, because we are in a compression. So we need to see continuation. Even if it's just grinding, we need to see continuation for the expansion to happen above on closes that upper second standard deviation, and preferably for bulls that upper third, which is about 137 to if Bitcoin's monthly candle turns green, then it would be towards 140. So what I'm describing to everybody here, typically I'm deep in the weeds on the daily and levels and like all this stuff, is macro analysis of the price chart, and there's a whole lot of fundamental analysis that I'm not talking about, because that's not usually the focus, that I think I'm going to start moving us towards, because I think that, we've done so much hammering on, trend, support and resistance, volatility and momentum, that now it's time to start tying these into a thesis and how you can create your thesis for higher time frames and relate that to lower time frames. And there's a lot of fundamental analysis that goes into that as well. It's not just the technical analysis portion that we're seeing on the charts. It's fundamental analysis of the Bitcoin network, wallets, and movement of capital as kind of buckets that we can start to look into. And I'll start to introduce free resources for people to do this research. You don't need to lean on it entirely for your thesis. Some do, but it's more about how does that fit into your thesis for what you're seeing in price, because there are underlying fundamentals, and then there is the technical price movements that are related to those fundamentals. And right now, this run is not over. We have a lot of people that are saying that this run is over. The run is not over. But there is danger on the other side. We need to see closes at minimum above this high at 109.360 or so. We need to see that, right? We need to see daily closes that become weekly closes that become monthly closes above there at minimum. And of course, any closes above there, then we look to the all-time high, right? So essentially 110 to 112. Above there, we can start looking to that upper second. And that's what we would have to watch very closely. Otherwise, we have to look to the downside here. Now, Bitcoin just the upper first was very close to $98,000 when this session first opened earlier this morning. Actually, it was yesterday for us when the actual July 1st candle opened. What we saw was that this candle was green and the upper first was closer to $98,000, which is one of the key areas on the daily that I talked about on my daily videos, right? 98 to 95. Well, it's very relevant now because on the monthly, it's the upper first standard deviation. If we were to see that area dropped on a monthly close, not only would we paint a high because, well, the last swing low here is at 98,330. If we close below 98 or 97 in this case, that would paint a high. It would be a higher high in the monthly, in fact. But that would also indicate that we are back into a full-on compression and mean reversion towards that basis. As the basis rises and price comes towards it, BBWP volatility falls, bands compress more. So it'd be loading or priming the pump for a volatility increase later, whether it be to the upside or downside. of course, we'd still be in higher high territory on a close and a swing, but the failure to close above, or any failures to really start pushing back above 109,360 on a close, going to start to change the picture for at least further consolidation and accumulation, and potentially even bear. But so far, it's very healthy looking. There's nothing really wrong with this. I know there's a lot of people hand wringing, but there's nothing wrong with this price action. So my thesis remains bullish, right? Until something changes. And some things that can change is when we start to look down in the weeklies and lower term time frames. For instance, and I'm not going to get into all the levels and stuff. Many of you know where to find me and where to find my videos. You can get the levels very easily. So this
every
is more
Monday, Wednesday, and Friday, right?
Oh yeah, and those are powered now by the Goxstein News Network. Big
Awesome.
shout out to
Congratulations, by the way.
Yeah, I appreciate it. Look, I think that what's being built over there is really cool. So I want to say that, you know, something that you and I have talked about, because we were talking all during this downtrend. Mm-hmm. And even during the beginning portions of this uptrend, I believe. Yes, we have, when we got this downtrend, we got the trend break on the weekly, right? Well, we just recently painted the actual high. This high was not only a trend break, but it was also a brand new all-time high on a close.
Just before that was our last show, I think.
Okay. That's when we were probably up here somewhere then.
So I think it was just before Vegas.
Okay. Yeah. Perfect. So we've now painted a higher high and a close. We have a bit of a swing downtrend, but the close is what matters. And it was, mid-June candle is what closed this high. Now we do have a swing downtrend, higher high, higher low, lower high, lower low, but it's about the closing trend as it relates to the trend break. So we have a trend break, and now we're looking for a closing higher low. We have a little bit of a swing downtrend. Where would we close a higher low? Because the more statistically likely outcome after a big trend break like this that is so far above the actual trend breaking high, the criteria for breaking the trend in terms of the high, that we're looking for higher low equal low structure, right? So the way to close a higher low from here would be to close above 109. That would set a closing higher low. Even though this is a little bit of a swing downtrend on the candles for the weekly, that would close a higher low. And then we're looking towards that 115, 116 area up here by the upper second. But if it doesn't close a higher low, we're looking lower. 95K to 98K is like my initials. And that's right around the basis band right there, 95.5, which is right around a point of control for the highest volume traded price in the range. That's stuff that I'm going to start getting us into, is how to evaluate that kind of stuff moving forward as well. And really starting to refine our process. And then we'll revisit the constructing our trend, support and resistance, volatility, momentum stuff. And I think we'll have a lot of fun doing so.
I like it.
Yeah, brother. Do you have any questions, or is it just kind of absorbing and trying to see what the thesis is?
Yeah, I guess at this point, a lot of this is, just absorbing. I know we've kind of gone over this. It's been a little while since I've actually looked at things from a TA perspective, because I've been busy with stuff and I haven't been able to get into, we haven't on our shows. I do catch your shows every so often, but more I'm just looking at I'm just looking for the numbers data,
Yeah.
I'm not actually doing the watching and following along with the analysis. So this was all just kind of good to reintegrate the levels and the macro down to the smaller time frame stuff. It does, and again, we're just kind of tracking and trying to see what it may or may not do based on what things are looking like in the short term and on the longer term time frames. But based on what you've gone over, my take on this right now is that there's no certainty as to what it's going to do, but worst case scenario, if it doesn't set a higher low right now, probably going back to that basis line or more or less and then
Or
maybe
lower.
some, yeah, but
I mean, is it from a fundamentals point of view? There's room, right? From a technical point of view as well. So I can tell you in the background from some of the fundamentals that I'm going to be showing you, there's room to go lower. I wouldn't want to see it do that because it starts to paint a more bearish consolidation picture on the higher time frames. But essentially bulls want to see 95 hold up if it gets there. At worst, the bottom side of the last higher low on a close, because we still don't have a higher low on a close since 93.5. Right? You want to see that hold up to the higher low swing over here at 89, which is where we saw the rejection come in for this lower high that we have now broken to paint the trend break here that we have. So now what we're looking at is we have a trend break and we're looking for the trend reversal setup. So there's a few different phases after coming from one trend to another. So we have the trend break right now. And when you get something like a trend break, and I'll just quickly draw this out. So when we are moving from a downtrend, right, to an uptrend, what we're looking for is we get the initial trend break, right? And then on the initial trend break, which in this case, we'll just say it right there, you have two phases to look out for a confirmed reversal. You get the first part is after a trend break, you look for a higher low or equal low. This is just an example. So this would be a higher low, right? Once you get the higher low, that is your trend reversal setup. So that's your trend reversal setup. And that's going to be on a closing basis. You can take it on swings. It just depends on the candle structure. But in this case, this would be a higher low trend reversal setup. The actual confirmation isn't until you break and close back above the trend breaking high. So in this case, you'd be looking for the trend reversal setup to confirm on closes above the actual trend break high. So for us right now, what does that look like? Well, we have the trend break high up here at 112. If we see a trend reversal setup, that would be on closes above 109. But then for confirmation of trend reversal, we have to see closes above that 112. Does that make sense?
Yes, I gotcha. So this could actually be an equal or a higher low.
Yeah.
So that low could all go all the way back down to the bottom where it had a low before the trend break.
So
And
here's
still
you get a
reverse.
I'll illustrate it for you. So you see the trend break,
Yep.
and then you see a trend reversal setup.
Yep.
How that can turn bearish is a lower high that then begins to go and break down.
Okay, so
that would be your bearish setup, is that you have a trend break, you get a trend reversal setup, then you get a lower high and then a lower low as it relates to even just this low. It doesn't even have to go lower than this low. In fact, it can just be a lower low, right? So because this, once confirmed, if it's a higher low, you get a lower high, lower low. Now you have a trend reversal setup to trend break. And then continuation would be lower high, lower low for full trend. Right.
So with that current candle that we're looking at right now, that last candle is going down. This would have set a lower high, but that's not actually but the low hasn't been set yet here.
Yeah, the low hasn't been set. So this would just be a complex top with a swing downtrend. And the swing downtrend is your edge in that case, right? Because we have higher high, higher low, lower high, lower low, and then we would just get another lower high swing, because this isn't a confirmed low. This is just a confirmed swing low. It's not a confirmed closing low. We just have one big closing high if that were the case.
Right. So it's still
but there is a swing downtrend, right? But in terms of closing trend, it's just a closing high. And closes are what matters, but swing trend can give you your edge.
Right. That could be telling you which direction it's going to go in.
Yeah, and you know, there's pattern traders that are looking at this as a you know, a bullish setup right now, because it's like it's flagging out. I would say that it's kind of it's expanding in terms of its price, you know, volatility. So if you're gonna, you know, draw patterns and stuff, you know, depending on where you're taking it, you know, you're kind of, you know, it's kind of flaggy. You know, there's some that are going to trade like, I don't trade like that. I trade horizontal support and resistance, zones of interest, and volatility. So, you know, to each their own. You know, but you know, there's many that are looking at this as a bullish setup. But just in terms of trend, you know, even if price falls from here, you know, many would be like, oh, it's a lower high. Well, the lower high was actually the swing trend, and that's up here. And we didn't close the candle closing highs until we already closed this lower high swing. So, which closes the entire structure up here, which is the 112 high, which is just higher highs and a higher high close. Now, swing trend would be down. You look for still higher lows somewhere, you know, basis or lower as it relates to this last low. But of course, it would give you the bias for lower term price action, right? Daily trend matters, all that kind of stuff.
So after all of this, I guess my position still is just accumulate more Bitcoin and hold on to it.
Yes. This is a trader's market right now, right? Like the lower price goes, the more attractive it is for longer term investors. Right now, it is a trader's market, but we're also seeing longer term investors get in at these levels, which is what I find interesting from the fundamentals side of things and the flows side of things and all these treasury companies and that kind of stuff. So,
well, the ETFs are on like 16 or 17 days of net inflows for Bitcoin.
Yeah, and then you've got all these treasury companies buying as well, which is, you know, whether it's 21.
Where's it all coming from?
Well, it's coming from traditional markets, right? They're funding up. They're running the Sailor model, and many are running the previous version of the Sailor model, which is
no. I mean, like, where's the Bitcoin coming from?
Oh, where's the Bitcoin coming from? I'm glad you asked that. Hold on one second. The Bitcoin's coming from OTC desks in many cases, but also coming from the open market, which is why prices are rising substantially and kind of flip-flopping around all over the place. But I don't know if you can see this. This is the exchange reserves. It has been falling off the map since
you've shown this before. Yeah, this is deep. This is way deeper even than it was.
Yeah, this is from 24, right? So if we look at when the spot ETFs launched, you just see exchange reserves going down. So it is substantially down. They're accumulating Bitcoin. So they're getting it from the open market via OTC and APs, which is authorized participants. That's their job, is to have as minimal impact as they possibly can when trading or obtaining the Bitcoin to back the shares in the ETFs. So, and then you've got treasury companies buying, and obviously Sailor is a treasury company, and many are popping up doing that, including what is American Bitcoin Mining, which Donald Trump Jr. or Eric Trump is a board member of. They just raised like $213 million to buy Bitcoin to add to the treasury. So there you go. Miners are now converting to become treasury companies. So all kinds of stuff. That's where it's coming from. And then of course, newly mined coins. And we're so far bought out over the newly mined coins that we're backed up to like what, 2028 or something. So it's all about circulating supply. And essentially you can think of like newly mined coins as already being allocated. Because you're just seeing
coins are already bought up
They're accounted for in many cases because they're going right to OTC. There's a lot of backfill there because players don't necessarily. If you start buying in big clips on the open market, you're just raising the price for yourself.
Sure.
So a lot of it's going through OTC deals.
Right,
but it's got to come from the open market as well.
Right, but eventually you're gonna need. You can't need your Bitcoin demands aren't satisfied until 2028. That's not going to probably work for some people. So that's
why they just buy now.
It appears to me that there's an obvious supply shock coming.
Yes,
if we're not already in it,
we're in it. It's just that they're being logical about the way that they do things. I mean, some people would argue they're not, and incurring a lot of risk, but realistically, who's going to call the debt on Sailor? No one. They can't. No, have to sell Bitcoin, right? Like they have a bunch of, premium stock that they're giving away, and a bunch of convertible notes that are out there. Why would you do that? Well, why would anybody invest in Sailor instead of just going and buying Bitcoin directly? Because they're looking at that as the one, it's more flexible in terms of, when you get stock and how you can use that stock at this particular moment in this environment. And then also, you're counting on it appreciating faster, like a shit coin. It's shit coins for Bitcoins in the traditional markets.
it's crazy that price is great right now, by the way. Like I'm super happy with the price where it is. And I think it's staying here, which is really cool, but it's not like it got here, corrected down, then actually set a new all-time high. Seems to be holding up here. I do think that we're settling in with all of these other bullish things going on. I can't see not having another run up before we have the major correction. I just don't think that there's any way that happens.
Yeah, I mean, I'm just watching the charts, taking it day by day as a trader. Longer term, Bitcoin's going to go up and to the right, so I don't really care.
Right.
It's all about how much more can I trade for at this point. I need more. You can never have enough Bitcoin. No one will ever have enough Bitcoin. No. Always want more. And at some point, you're only going to be able to get Satoshis.
Right. Some people will only ever be able to have Satoshis.
Exactly. Yep. That's kind of, that's pretty much all I got for you today, Peace. I think,
we're pushing. Actually, we're a little bit over an hour. So, I think that's a good amount of time here. It's 20 past 2, so a little bit past what we were targeting anyway. But Landy, thank you so much, man. As always, a ton of information, great value, great conversation. You explain it all very, very well and in great detail. And we're certainly super fortunate to have you here. Those who are practicing their TA, if you're using TradingView, you can actually get the free Landy bands over at TradingView. You just got to subscribe to them or something. I forget.
All you got to do is you can either scan the QR code, it'll take you right there. If you're already like on a phone, it'll direct you to add it to your chart. It'll add it to TradingView.
Yeah.
It's free. It is a private indicator. There's as PineScript has been updated, I've had to deal with a few things as I have a lot of things going on, but there's going to be some improvements to the indicator as well, and some new features coming. But yeah, it's free, but you do have to add it to your favorites. And once it's added to your favorites, you can find it there.
It's hard to find them until you add it to your favorites, but that also, it's the QR code right there. You can also find it in Landy's X bio. It's at Crypto Landy. GP is just commenting. I'm not sure what he's referring to. Damn, I didn't even know. I don't know if he didn't know. He missed TA. He didn't know. Yeah.
Oh, okay. I was like,
he had his. He was over in the stacking DAO. GP might actually be the busiest guy in crypto right now.
I think so. I think so. And big shout out to you, GP. Much love, brother. I miss you.
Absolutely. Yeah. We'll get, you know what, Landy, you would make his day if you dropped in on the night show.
I know I've been trying, but the kids are out of school.
Oh, that's right. That's right.
Yeah.
It's busy season.
Yeah.
Other busy season.
So I'm going, like, it would be going right from ATC. I would try to jump in with you guys and GP, and now, you know, kids are like, hey, dad. It's like, okay.
I know what it's like. I know what it's like.
Yes, you do, sir. Yes, you do.
I got our new furry. You know, we got a puppy, right? You know,
yes. I've heard the puppy, and I've seen a little bit of the puppy. So
he's,
yes,
scratching himself behind me on the floor as we speak.
To summarize, GP, Bitcoin's going to go up and to the right forevermore.
Yes. Yes. We didn't do stacks today, buddy, but
in the future we could probably take a look.
Yeah, maybe next week we'll take a look at the stacks chart.
Sure.
If you're good with that, I'm good with that.
Absolutely. Well, I gotta run. I gotta talk to somebody behind the scenes here. Peace. I freaking love you, brother. I missed you so much, and I'm really happy that we got to do this today.
Me
and I
too.
look forward to the next one. And I'm gonna try to carve out some time to hang with you guys. Well, we'll see what we can make happen.
Let's do it. You know, you're always welcome on all of our stuff, man. Anytime you're around, we'd love to have you.
Appreciate it.
And thank you I'm really glad we got back in the swing on this. Guys, follow Landy, follow us on DeOrganized, and hopefully we're back on the schedule, getting this done once a week, bringing you guys all some crispy, fresh TA news and how to do it from the master himself. Thank you, Landy. You all have a blessed day, and thank you for joining us today.
Take care.